After 3 days of rallies, we saw the S&P 500 close lower here today, just ever so slightly down 0.22%. The rest of the indices were down as well. The Dow Jones held up a little bit better, largely because Boeing had a very nice day, and the Dow Jones is a price-weighted index, so it was only down 0.11%. But largely, we formed a number of dojis in our indices here today. And a doji is often a sign of hesitation. It's a sign of potential reversal as well. So we'll have to keep our eye on that story. Everybody's kind of waiting to see what's going to happen this weekend at the G20 meeting. So in our trade application example today, I thought we would focus on more of a neutral trading idea in a little bit more of a boring area outside of the stock market. So with that, let's go ahead and get started. Welcome to the Market Outlook video. My name is Brandon Van Zee. It's November 29th, 2018. First of all, we want to welcome you in. If you've never checked out our videos before, we'd encourage you to click subscribe on our YouTube channel. Also sign up for our email distribution list in the description area, which entitles you to receiving the stocks that are giving you overbought and oversold cluster signals in the S&P 500. We're also heavy users of Twitter. Feel free to follow me there. My handle's @BrandonVanZ. And if you see any of the tweets that revolve around the Market Outlook video, we'd encourage you to click like and retweet. Lastly, we do have a Facebook presence as well. Check out our group in the web address embedded in the logo in front of you. All right, let's go ahead and dive into our analysis here for the day. As you can see, I do have chart 4B pulled up in front of us for those of you that are premium market scholars that want to follow along with your charting package at home. What we're looking at here are the 4 different U.S. equity indices, and it kind of gives us a sense of how the large cap stocks do versus the small cap stocks, or technology oriented, kind of a nice way to see all of them side by side by side. Well, on this particular view, we're using the market forecast technical indicator. That's a technical indicator like so many others that you can find on the Thinkorswim platform. And it's a way for us to kind of judge posture over multiple time periods. Now, the kind of default view of the market forecast is the intermediate time period, and that's going to be your green line. The blue line is going to be a near-term posture, and then the red line is going to be kind of really short-term momentum posture. So kind of the default setting that you'll hear David and I refer to in these videos as our either bullish or bearish posture will be that intermediate green line. And whenever we see that green line moving higher, if it's between 20 and 80, then we would consider that to be bullish. Now notice that the green line is currently at 42.37 and rising. Remember, that's part of your charting package there. You can get those labels to tell you whether they're rising or falling. And as long as it's rising, we would consider that bullish, but because it's not above 50 yet, we wouldn't consider it strongly bullish. Some of you may have noticed that the colors in the background of the charts tell us a little bit something about that posture as well. And as an example, over here, we had this lighter green background color on the Dow Jones back here in early November. And then a little bit later on in the month, we actually had this darker green shaded color there. Now, the difference between the two, as you can see down below here, this green line was rising. And so we do consider that to be a bullish posture. But if it's not above 50, we don't consider it to be a strongly bullish posture. So anyway, that's a little bit of background on how to read the charts there. Now to today's action, you can see that we do have light green background colored charts on all 4 of our U.S. equity indices. In other words, we have weekly bullish postures from an intermediate time perspective on all 4 U.S. equities using the market forecast technical indicator. As we're looking at them, there's a variety of ways that you can kind of distinguish one versus another. One thing that I would point out is that the Dow Jones, as I mentioned in the intro, did close lower by only 0.11% today. You'll also notice that the Dow Jones was able to kind of put in a double bottom here over the last couple of months. The first kind of stab at the low there would have happened on, it looks like it was October 29th, and then we put in another low here on November 23rd. Now notice that this second low was not lower than that low, so that's important because it did appear that we were going into some sort of a downtrend there, but if we can get an equal bottom, or in other words, a double bottom, then that kind of stops the projected downtrend in its tracks. So that's the first step. Now we need to figure out if we can get a leg higher by looking for maybe some higher highs on the chart itself. And we're not quite there yet, but it is a promising sign to see that the Dow is trading above that moving average at the current juncture. So we'll keep our eye on that. Some of the other indices aren't looking quite as strong. So for instance, down below here on the NASDAQ, note the difference here on the NASDAQ from the Dow. The NASDAQ on its lowest stab in the end of October 29th right there, it put in a low price of 69.22. Notice that in its second go of things over here, where we put in this other bottom here on November 20th, it did breach a lower point. Those labels are nice and can help us out with that on the chart. So you can see that the low point is on this candle as opposed to this one. Whereas on the Dow, we've got the low point on this candle and not on this one. So it tells us that on a relative basis, those mega cap Dow-oriented stocks, think about your Procter & Gamble's and Coca-Cola's of the world, are kind of retaining a little bit more strength, especially on a relative basis, than some of those big technology-oriented firms out there, whether you're talking about Amazon or Microsoft or Apple, etc. Many of them have had a very difficult go of things here today. In fact, we talked about some of those in my question and answer session here today. So remember, if you are a premium subscriber to Market Scholars, you have access to David and I's daily trading rooms and Q&A session. So I held my Q&A session here today, and the very first question I answered today was about NVIDIA, kind of a fallen angel, a stock that had gone down from high to low over 50%. So if you want to hear my take on NVIDIA or any of these other questions in regard to APU or SPGI or TJX or Starbucks or Phillips 66, or Smuckers, etc., feel free to check out that recording. It is now posted and available for those of you that are premium Market Scholars. Also, while I'm over here on the internet, just briefly remind you that you can watch these market outlook videos on our website at marketscholars.com. We try to make it nice and convenient for you to click like for your social media engagement, all in one place. So if you notice down below the video itself, you'll see a link for the tweet that involves the market outlook, also a link for the Facebook likes, and then we have another like right here on our website. Now, I did notice that on Tuesday I only got 91 likes. Perhaps I was not quite up to snuff on that day. Generally, I am looking for at least 100 likes. Keep in mind that in order to do these videos, David and I have to put in a minimum of 2 hours in order to do all the recording, the uploading, the editing, and all of that stuff. Now remember, we don't get paid a cent for doing this. We don't get paid a cent in advertising money. You guys are not paying us to watch these particular videos. And so we constantly have to evaluate whether it's worth our while to do these videos and take a couple of hours out of our day, because of course our time is very valuable, just like yours is. So if you get benefit out of these videos, we would highly encourage you to click like on Twitter. It's as simple as one single click, and obviously if you get value, it should be worth it for you. So please continue to do that to let David and I know that you want us to continue these videos going forward. All right, back on over here now to the Thinkorswim platform. Let's go ahead and take a look now at another chart setup. In this case, let's go ahead and switch our thought process on down here to the 12 grids. And so let's go to chart 4E. And this will show us our intermarket analysis 12 grid. And this is also kind of oriented around the market forecast technical indicator. Now, you can't see that actual technical indicator on each of these miniature charts here because it would just take up too much room, but the background colors of these charts on the 12 grid will tell you whether we have a bullish or bearish posture on the various securities that are pulled up on the charts themselves. If the background color is green, that means we have a bullish posture. If the background color is red, then that means we have a bearish posture. And again, when I say we, I'm technically meaning the market forecast intermediate line is suggesting that. All right, so as we look at this, a couple things that did catch my eye today. We finally had a little bit of a pullback in the dollar today. It's actually the second straight day we had a pullback in the dollar, but we remain above a rising moving average right there. So right now, the dollar does look to be kind of a safe haven in this current marketplace. However, I was also impressed to find that gold has gone up for the last couple of days here as well. Now, it trades after hours and different things like that, so you're going to see a little bit more erratic behavior here, but it is good to see a couple of green candles there after 3 red candles. And so despite the dollar maintaining its strength, gold isn't looking half bad. I really wouldn't be surprised to see gold try to make some sort of a move. If there's some chaos that ensues after the G20 meeting this weekend, gold can sometimes be viewed as a store of value as well. So we're going to keep our eye on that story. Agricultural commodities did get another bounce here today, but we remain below a falling moving average there, so I wouldn't read too much into that quite yet. And kind of the same story there with crude oil. Crude oil was up 2% today, but that's just been a house of pain, and it still has not broken out of that downward channel. Until it does, we have to remain skeptical around that. Other things that I wanted to point out, notice that we've kind of got the bonds or fixed income types of securities kind of huddled up here towards the middle. We've got some junk bonds on the left-hand side that does have a bullish posture right now, but it's still below a falling moving average. TLT, which is the U.S. government long bond, has been more of a neutral pattern. As you can see right here, it's really just been traveling sideways. It technically has a bearish intermediate posture because it's at 77 and falling, but it does have its price positioning above that moving average. And so it's not as though this is a significant downtrend. It's just one that has a little bit of a weak posture right now after going on a pretty decent reversion to the mean run from a couple of weeks back. You find that foreign bonds actually look a little bit better. Not a lot of people have been talking about foreign bonds, but you can see here that if you're pulling up ticker symbol BNDX, that you're close to 3-month highs. In fact, I think you might have touched 3-month highs on an intraday basis here today. So kind of a sneaky play there that not a lot of people are looking at. Keep your eye on the foreign bond market. Let's go ahead and take a peek at our next chart setup now. And this will be going on down here to let's see, it's the chart 4F, and this is going to be our foreign stock markets 12 grid. As we look at this, you can see it's looking a little rosier out there. We see a lot of green on the board. A lot of these charts have been trying to stabilize here and trying to get to be a little bit more bullish here. And so as you can see, the only one that's red on the board is Mexico, and Mexico actually had a pretty decent day. It was up 1.6% today, so nice little rally there. But as you can see, we remain in a fairly significant downtrend on Mexico, still trading below that falling moving average there. But all the rest of the charts are exhibiting at least enough price support to establish a bullish posture using that intermediate term line. Some of the charts look better than others, as always. Brazil has been one of those markets that we've been talking about for a long time. In fact, in this very video, I believe I did a bull put spread on EWZ here not too long ago. It's holding up fine. Brazil hasn't continued to go up at the same rate that it did between September and the beginning of November. But remember, when you're doing a bull put spread, even just having the security go sideways is perfectly fine. You'll still make money on a trade like that. But the good news is, despite not continuing its big thrust higher, it hasn't thrust backwards either. It's kind of just biding its time right now, and it is stabilizing in an area just above its moving average right now. So keep your eye on Brazil. Decent chance that thing has the power to break out to 3-month highs here if the card's set up the right way going into the year end. Remember, this is traditionally a bullish time of year for markets in general, and so when you look at the foreign stock markets, they're kind of a hyped up version, a souped up version of the U.S. markets. They're a little riskier, at least that's the perception, but that can be a good thing. Typically the riskier the asset, the more it can go up when animal spirits are alive and well. And so if we do get a robust rally into the year end, it wouldn't shock me at all to see the foreign stock markets outpace the U.S. markets. And right now, with all these this green on the board, things are looking a little bit better. Things are looking a little bit better. So we'll keep our eye on the dollar, different things like that. But right now, the foreign markets don't look half bad. Let's go ahead and take a look at our next chart, which is going to be the U.S. sectors. This is chart 4G for those of you that are following along at home. And the way that we would look at this one is, first of all, the chart in the upper left is the S&P 500, and then the 11 charts following it are the 11 different sectors that make up the S&P 500. And you'll see here it's mostly a bullish story that we're looking at here as well. The only exception to that is energy. Energy prices continue to kind of stumble or struggle on a relative basis. Price remains below a falling moving average, and it's the only one that has that intermediate term line in a position that would be considered bearish. Now, this one's a little different. Some of you might be saying, well, wait a second, doesn't that say rising right there? Why would you consider that bearish? Remember, if the reading is below 20, we consider that to be the lower reversal zone. So it doesn't matter if it's rising or falling. As long as it's below 20, we do consider it to be a bearish posture. Now remember, for those of you that have this charting package, if you want to see the actual market forecast indicator, you could just right click on whatever chart you wanted to look at and go to maximize sell, and then that'll show up down below here. So you can kind of see what I mean. When this green line is in the lower reversal zone as it is right now, we do consider that to be bearish. So if that green line breaks above 20, at that point the chart would switch to then a green background and it would be considered a bullish chart. So anyway, that's our only problem child right now. Otherwise, markets are behaving themselves okay. Notice that the consumer staples have been up for about 5 days in a row, so that chart's looking pretty good. Healthcare actually broke out to a multi-week high. In fact, healthcare stocks are at their highest levels since going back here to October 10th, so that's a very promising sign as well. As I shared with you guys on Tuesday, healthcare has been working its way back up the ranks there over the past week on my sector selector tool as well. The utilities remain above a rising moving average, and so do real estate. Materials have been trying to stabilize above a moving average. So has industrials and discretionary. Same goes for financials up here. And then the communications are basically right at that breaking point. Notice that communications technically is still in a downtrend. And so this is kind of an important level for XLC, which is the communications sector ETF, because it's sitting right on that downtrending moving average. Notice that last time we attempted to break through that downtrending moving average, it failed. It went up there, kissed it, and went right back down into its series of lower highs and lower lows. So as it stands right now, we're just a hair below that moving average. It'd sure be nice to see either tomorrow or perhaps early next week a breakout to the upside. Remember, the communications sector is new as of September, but it's not unimportant. Remember that Facebook and Google are part of that, and so it is kind of allows us to kind of take a temperature of the risk appetite of the market as well. So more so than not, we do find a little bit more bullishness into the marketplace right now than we did just a week or two ago, and that's generally perceived positively. But as I mentioned before, this weekend is an important weekend as the G20 meets, and almost equally as important as the G20 meeting itself is the dinner between President Trump and President Xi. Right now, it seems like much of the world's tension revolves around the trade war between China and the United States, and I think a lot of people want to see that get resolved one way or another, and perhaps this weekend is the first opportunity for that. Now, it's also the first opportunity for those two leaders of the respected nations to bump heads even further and walk away being even more upset with one another. So that's why it's a little bit more of a dicey situation right now, just depending on how things shake out there. And so I thought what we would do for tonight's trade application is come on over here, first of all, to chart 4A, just to get a one grid for the market forecast pulled up. And I'm going to pull up TLT. Now, TLT was one of those charts we reviewed in our 12 grids a moment ago. Remember, TLT is the basically the long bond, U.S. government treasury. And so it's a good gauge of what's happening with fixed income. Well, right now, you can see not a whole lot is happening with fixed income. This is basically telling the story of putting me to sleep, right? It's like this thing has been going pretty much exactly flat since the beginning of October. Now, keep in mind context there. some of you might be begging for a boring story after suffering some very ugly drops in share prices out there, right? So the stock market has been quite volatile over that exact same time period where the U.S. government bond market has been doing absolutely nothing. And so one of the strategies that you can implement if you believe that that will continue going forward, and what I mean by that is if you believe neutral trading or sideways price action will continue going forward, one of the ways to take advantage of that is by selling an iron condor. And so let's go ahead and take a peek at what sort of iron condors are available for us. I'm going to come on over here to the trade tab. Now, the good news is TLT is pretty liquid. Remember that the bond market is generally perceived as being a very boring place, and oftentimes it's not all that conducive to options trading. But TLT is kind of the exception to the rule. TLT oftentimes does have quite a bit of trading within its options. In fact, you can see some of these here, like 35,000 contracts in open interest, etc. So if you're going to take a look at the options market in the bond world, then TLT is probably going to be your go-to area. So what I'm going to do here is I'm going to look at the December contracts with 22 days left until expiration. So just the normal monthly contracts there. And a lot of times what I like to do is look for the 20 delta. And so on this particular case, I'm going to focus on the 112.50 strike here from the put side of the equation to sell, and then I'll look to buy a $1 wide, so I'd be buying the 111.50 on the put side right there. Now on the call side, where I thought we would take a peek is actually 116.50. Which is right at this level here. It's the 24 delta, and then we would be looking at buying the 117.50. So let's go ahead and load that up, and then we'll talk about it a little bit more. So first of all, in order to load up an iron condor trade, you just right click on one of the strikes that you want involved in the trade. So I usually just come on over here to the sold put strike, right click on it, go to sell iron condor. So come down, click on iron condor. That loads up our trade down below. Now notice there's 4 different legs of this trade. That's an important conversation because the more legs that are involved in your options trade, the more liquidity is important for you. And so make sure that if you are implementing iron condor trades, you've got something that has a decent amount of liquidity. All right, so once we've got the puts pulled up, so notice that one of these strikes has -1 contract of the 112.50 put. Now I do want to change this to the 111.50. I don't want a 50-cent wide on that one spread. I want at least $1. So we've got $1 spread here on the put side. So we're selling the 112.50. We're buying the 111.50. On the call side, I do need to manually change a few of those numbers around. So the strike that we were going to sell was going to be the 116.50, and the strike that we were going to buy was going to be the 117.50. Again, kind of matching that $1 philosophy there. So notice that when we're loading up this trade, we're going to receive a credit of 29 cents for this trade. Now, to determine whether that's an acceptable amount for you or not, it's entirely up to you, but a lot of times we're just looking for at least a 30% return on risk to make it worth our while. So if I click on confirm and send here, notice that it's got our max profit and our max loss. So let me get my calculator out here, and I'll show you that if we take the max profit number of $29, again, we're just showing this from an educational perspective on one contract. So you do however many contracts you need to for position sizing your portfolio, but the math will hold true no matter how many contracts you do. So 29 divided by, in this case, 71 tells us that our return on risk is just a hair above 40%, so 40.8% in this particular case. So the next part of the equation is whether we want to do it. We know that we have a return on risk that seems acceptable enough, but the question is, does this make a lot of sense or not? Now notice that when you click confirm and send, the platform will actually show you what your break-even prices are. So notice that it's got it listed right here. So it's 112.21 and 116.79. And remember, this is a neutral trade. So what you're hoping to accomplish is for the stock, or in this case, the ETF, to go absolutely nowhere. So if I come over here to the chart, it might be also helpful to kind of have some drawn items to kind of represent our break evens. So let me come over here to the drawings, and you can do this from an automated perspective as well if you're using the Analyze tab, but otherwise you can just manually draw your lines by using this drawing tools area and going over here to price level. And I'm just going to draw kind of one line up here. I'm going to right click on it, and I'm going to go to edit properties, and I'm going to change this number to 116.79. Remember, that was the top end of our break even that was just shown to us a moment ago on the confirm and send pop-up area. So I'm going to click OK. So that's our upper break even to the top. And then if I'm going to draw another line somewhere down below here, I'm going to click that into place, and I'm going to right click on that bottom line, again going to edit properties. On this one, I'm going to go to 112.21. Click OK, and that shows us the break even on the downside. So this iron condor, or we're the seller of the iron condor, we basically want this security to stay in between these two blue lines on my chart. Now notice that on the upside, we've got plenty of room. In fact, the last time we were trading above this blue line would have been way back here on this candle, basically on October 2nd. On the downside, there was one candle along the way that did breach that level, but it was only one day, and that day was on November 2nd. You can see that this candle did come just ever so slightly below our bottom break even, but I think a lot of people would view this as being an acceptable setup, meaning that 95% of the time in the last 2 months, this particular security has stayed between these two bands, and as long as that continues for the next 22 days, then we should be able to profit off of that thought process there. So let's go back on over here to the trade tab. I'll click confirm and send, review it one last time, and go ahead and send that one in. All right, well, I want to thank you for joining me here tonight. Always a pleasure to go to work for you. We did have some dojis on the indices here today, so a little bit of a hesitation as we kind of go towards the weekend here in the big G20 meeting. And therefore, we're trying to play it a little bit safer, making sure we have a little bit of dry powder to go to work, and we're just going to deal with a fairly neutral trade within the bond market with our trade example here tonight. So remember, David's got his portfolio management class coming up tonight for those of you that are premium market scholars, and then he'll be back with you tomorrow here on this market outlook video as well. So until the next time I see you, best of success with your trades and your investments. Goodbye for now.